Root has reported strong financial results for Q2 2025, significantly surpassing analyst expectations, with earnings per share of $1.29 against a forecast of 52 cents. The company's revenue also exceeded projections, reaching $382.9 million compared to the anticipated $354.35 million. Despite these positive results, Root's stock fell to end the week. Investors seem cautious about the company's future profitability amid ongoing investments and expected near-term pressures. Yet Root's focus on AI and machine learning appears to be paying off with enhanced pricing models and improved customer lifetime value, leading to record-high gross earned premiums of $371 million, net income of $22 million, a $30 million improvement year over year, and operating income of $27 million, a $24 million increase year over year. Root plans to continue investing in expanding its national footprint and enhancing its product suite. However, the company anticipates a $16 to $18 million non-cash warrant expense in Q3 and expects slight increases in loss ratios in the second half of the year due to seasonality. CEO Alex Tim emphasized the company's long-term focus, stating, "At Root, it's all about the long term." CFO Megan Binkley highlighted the company's strategic investments, noting, "We are making targeted investments in our product and technology," essentially echoing the focus on long-term growth and innovation in the face of short-term profitability pressures. For more on stocks and crypto, follow Ascencore. See you next time.